Gold prices split for dollar versus euro and GBP investors as central banks split over inflation. Gold prices split again on Thursday for US versus other investors, holding firm in dollar terms above $1,800 per ounce but spiking down to three-week lows in euros and sterling as the European Central Bank repeated its «easy money» stance, but the Bank of England tightened UK monetary policy for the second month running. The gold price in pounds per ounce sank to £1,321 on bank rate, rising to 0.25% per annum, with minutes from the MPC's meeting showing that 4 out of 9 policymakers split today from Governor Andrew Bailey and voted for a steeper hike to 0.50%. UK inflation in consumer prices will top 7.2% in April, the Bank of England also forecast, up from the three-decade high of 5.4% already recorded last month. Energy prices continue to be the main reason for the elevated rate of inflation, said ECB President Christine Lagarde, meanwhile, holding the 19-nation Eurozone's key interest rate at -0.50% and making no change to Frankfurt's continued QE bond buying plans. With Eurozone inflation rising to a currency union record of 5.1% per year this new year, market-based indicators suggest a moderation in energy price dynamics in the course of 2022, Lagarde says, and price pressures stemming from global supply bottlenecks should also subside. Despite the lack of ECB action, the euro rose and the dollar sank on the FX markets, pulling the gold price for German, French, Italian and other single-currency investors down to €1,582 per ounce. Gold's annual average price in US dollars per ounce. Source: Bullion Vault and LBMA Forecast Survey. Gold is now caught between the anticipated pace of the Fed hiking cycle and inflation expectations, says Suki Cooper, head of precious metals research at London bullion market maker Standard Chartered, in the new 2022 forecast survey published by industry body the London Bullion Market Association. Giving an annual price forecast within 2% of the survey's average prediction for the fourth time in 5 years, while the gold market has already priced in a number of headwinds, such as scope for US dollar strength, Cooper says, it still needs to contend with the strength of other asset classes amid a rate hiking cycle and the greater opportunity cost of holding gold. On average, the 28 analysts entering forecasts for this year's gold price see the metal averaging $1,801 per ounce, virtually unchanged from last year's new record high of $1,798. Coming closest to that average forecast with her outlook for $1,800 per ounce, gold is down but not out, says Swiss refining and finance group MKS PAMP's Nikki Shields, with an innate ability to rally when the consensus is bearish. But, we acknowledge that if $1,675 is broken, all hope of pricing in inflation will be gone and a new bear market will be enacted, where gold will lose appeal as a monetary asset and inflation hedge. At the end of the day, counters the most bullish forecaster at $1,965, Torsten Polleit of German gold dealers Degussa. Central banks will prioritize the goal of keeping the economies going, over bringing inflation down, keeping inflation-adjusted interest rates well in negative territory. Polleit's forecast also led the 2021 survey, his first entry to the LBMA competition, with a prediction of $2,300. Leading the 2022 bears at $1,630, Bernard Dada at French bank Natixis sees the opportunity cost of holding gold rising when yields rise, making large outflows from physically backed ETPs the biggest risk. The winning forecaster in 2015, when gold prices hit their bear market low of $1,160, Dada then forecast another 14% drop in 2016, but the metal instead rallied almost 8%, beginning what has been a 6-year rise to date.